Hello everyone, really great to see you today in this room for this important session on finance pathways for smallholders and communities. Actually, I was reflecting on this session and I thought, wow, that's the kind of session I would have liked to watch and to attend when I started with the work on sustainable finance. You're going to see a diversity of models of financial pathways and a diversity of perspectives that will also help you understand the complexity, or rather to decomplexify those models to be able then to act and to implement in your context, in your different countries. So this discussion is part of the ACE Investment Case Symposium here from Belém in the Blue Zone, but also online. We have more than 3,000 registered participants for the Investment Case Symposium. The session is co-organized by the German Federal Ministry for Economic Cooperation and Development, the BMZ, and by the Food and Agriculture Organization of the United Nations, FAO. The session will be interactive, so you'll have the opportunity to ask questions, and participants online, please also prepare your questions, and you'll see we'll have a Slido link so you can also input your questions that we'll use for the discussion. We will explore today how restoration, markets, and investments are actually linked and how they can foster inclusive pathways that unlock finance for smallholders and local communities. And we will discuss the diverse types of capital. You know, we're not only thinking of grants, even though grants are important, we're also thinking guarantees, equity, loans, and other financing instruments, including innovative ones. So with that, we're going to be able to understand how to build actually financial systems that can empower local communities, indigenous people, local farmers, and how this will also enable to promote restoration and build restoration, investable restoration projects at scale. And without further ado, I'd like to, actually before we start the panel, I'd like to introduce Mr. Marco Boscolo, who is Senior Forestry Officer at FAO. And Marco will lead us through an overview of these key finance instruments and pathways for smallholders, communities, for the sake and benefit of restoration. Dear Marco, the floor is yours.
Okay, thank you, Ludwig. As Ludwig said, my name is Marco. I'm based in Rome. I'm sorry I cannot be there with you. That would have been really fantastic. And my work focuses on expanding opportunities for smallholders and local communities to access finance. It's been a few years, at least since COP26 in Glasgow, that has been international recognition that smallholders, small enterprises, local communities are key agents to make forestry, landscape restoration more sustainable. And yet most of these actors really still rely on informal finance, their own resources, loans from family, from money lenders to support their activities. And through a program, AFR100 program supported by the German government, we're learning more about 5 promising pathways to improve access to finance for smallholders and local communities. And very kindly, they have put on this one slide where I have tried to summarize what these pathways are and also how they're changing. The first one is a very traditional form of finance, grants coupled with technical assistance provided by development partners. These are the type of finance usually provided by multilateral, bilateral, Green Climate Fund, JEF. That's usually the traditional way to support smallholders. But what is changing now is that grants increasingly are being used to leverage additional finance. We try to use grants to build activities that have some commercial viability so that they can be attractive also for private finance. A second pathway is a form of internal finance that producer organizations set up for themselves, cooperative savings schemes, microfinance schemes, village savings and loan association schemes. And there has been a growing body of work and research by partners like the Forest and Farm Facility, the International Institute for Environment and Development, who are really documenting that they are growing in importance, in size, very helpful to help smallholder access formal and larger volume of credits. A third pathway is commercial bank credit. This is something that has traditionally been very difficult, if not impossible, for smallholders to access for restoration activities. But things are changing. Even in the developing countries, many banks are now aligning with the sustainable finance criteria, with sustainable finance initiatives. Some countries are working to develop taxonomies that can help banks assess what is a green investment, what is not, and they're under a lot of encouragement to green their portfolio. So this is also an area that is rapidly evolving, and I'm very excited to know that among the panelists we have a bank that will speak about this modality. Supply chain finance is a fourth pathway where buyers, off-takers of smallholders' products and services advance finance to their providers. And this is also not new. But what is new is that we have a number of new instruments, whether they are certification, traceability tools, digital finance tools that make it possible to really scale up this supply chain finance modality. And finally, blended finance models that combine grants, concessional loan, risk mitigation instruments, carbon payments, to come up with innovative solutions really adapted to local circumstances and local stakeholders. So these are the 5 pathways I wanted to introduce. Let me just conclude by saying that these pathways should not be seen in isolation. Grants, internal savings schemes, supply chain arrangement, bank credit, blended finance solutions can and should be linked together. And when finance providers collaborate to combine these different pathways, we reduce transaction costs, reduce duplications, increase leverage, and can deliver solutions that can live beyond the timeline of individual projects. And regional partnership like the AFR100 program demonstrate that this coordination is possible, is effective, and should be supported. Thank you very much, Ludwig. Back to you. Thank you.
Thank you very much, dear Marco. As you see, we have 5 pathways, 5 different types of models. And today we're going to be lucky to learn from several of them, thanks to our distinguished panelists, which I'm willing to invite now, actually. And maybe, colleagues, you could also share the QR code for the Slido questions. So participants in the audience, online, in person, can ask questions. So now let me invite our distinguished panelists. Rekia Fudel, she will be joining online. Rekia is the managing partner and founder of Barca Fund, which is an impact investment vehicle supporting African entrepreneurs. We also have with us here Joycelyn Makule, Head of Operations and Program at the CRDB Bank Foundation in Tanzania. Welcome, Joycelyn. And we have with us Victoria Crawford. Victoria is Director Agriculture and Food at the World Business Council for Sustainable Development, WBCSD. Welcome, Victoria. So let me actually ask a question to Rekia. Rekia, as you know, it's not, this movement on restoration finance is not new. There are already a number of projects, of initiatives, of funding mechanisms, financing models that exist, but I'd love to understand how is your model actually and your approach to investment in restoration different from what others do? And I would also like to understand what actually motivated you to go along this journey.
Thank you so much for having me on this panel. I wish I could be in Brazil. I've never been to South America. It was going to happen this year, but then it didn't happen. So I'm hoping to be at COP next time. So I hope you guys are all having a wonderful time. And more importantly, learning and sharing from each other. And so again, thank you for GLF for the opportunity to be here and the privilege to be able to talk on some of the work that we're doing. So I'm Rekia Fudel. I'm the managing partner of Barca. We are an investment fund. We started really very specifically to come in from the for-profit side. I think that's the first thing that's different from our approach. We wanted to look at restoration and specifically the impact of climate change on communities across Africa and how can the private sector do more. And so I can think of three ways in which way we are doing things differently. I think the first one is the layer of stakeholders who we're after. Ultimately, it's smallholder farmers that are most impacted by climate change and where we want to see most of the change happen. But instead of directly addressing their issue, we went one step above and start working with SMEs, right? There is hundreds of thousands of SMEs on the continent led by young men and women who are smart, who are educated, who are eager, and have a layer of their work that's linked to smallholder farmer, right? And so those are our stakeholder. We find these SMEs, the for-profit companies, and that's good to be for-profit and to want to make money. And we try to bring in this layer of how do you make it in a way that's sustainable? How do you make it in a way that's good for your company, for the earth, and most importantly, your supply chain? So the first the first way where the way that we tackle things that's different is this layer of stakeholder, right? It's for smallholder farmer, but we don't directly deal with smallholder farmer. We deal with SMEs, young men and women with for-profit companies that deal with and work with smallholder farmer. The second thing that's really important in our work, right? Part of the impact that we want to deliver is that we work with this with these SMEs and present restoration as a business case. Right? Restoration doesn't have to be something you think about or other people do. Restoration can be a business activity for which you will benefit because you're securing your supply chain and you're optimizing your supply chain. For example, you're a company that transforms shea from shea butter in Cote d'Ivoire, right? And so you have an incentive that shea trees and shea nut continue to be sustained and continue to be grown sustainably, or avocados or moringa or fruit trees, right? There are trees that are linked to your supply chain. And so the optimization of your supply chain and the securitization of your supply chain for the company of the future is making sure you understand how is that material, that product that you need sustainable in the future so that it can keep securing it. So restoration is a business case that can be part of your activity, even if it's not immediately for most of the companies we work with. The third thing that we do that's different as well from other funds and that we're really excited about is that as part of our investment, right? Because it's one thing to find these companies and to invest in them and to convince them. But the most important thing, the way that we move the needle, the way that we show this is successful is by making investments. So taking risk capital and providing it to these companies that we work with the layer specifically for restoration. So it's not a grant, it's an investment capital. We invest equity and shareholder loans. And part of the agreement is, yes, you're getting $200,000 or $500,000 from us, but there is going to be 10%, 15%, 16% that's uses of fund is for restoration. This is part of our agreement, and companies have to agree to it before we can invest. And so at that point, then we see a real effort, right, to meet not only our financial KPIs and milestones that we expect when an investor invests, but also our impact target, right? If we require, and part of our agreement is that you're going to help plant 100,000 trees in a degraded area where you source from, then those are going to be part of our portfolio management as an investor, right? And so we find this approach to be much more possible to be able to bring more people into this restoration economy. We've made a few investments and we're still testing the model. One of our privileges to have big partners such as the World Resource Institute and others help us with the impact piece, help us with the measurement piece, right? Being able to tell for us, are these companies able to plant 100,000 trees and be able to monitor and report on that impact? These three ways of these three layers that we look at as an investment fund, as an impact fund, has been really, in our opinion, very groundbreaking. And so we continue to do this work and continue to prove the case for restoration from a business perspective, so that the first impacted stakeholder are the SMEs that we work with, but ultimately it will be smallholder farmers. So I'll stop there and happy to answer more questions about our processes. But very excited to be doing this work, because ultimately we're investing in companies and we're helping young men and women build futures.
Thank you very much, Rekia. I think you deserve a round of applause for your very clear messages. What I get from your presentation, from your intervention, is that it's possible to get a fund that supports companies that then ultimately supports farmers, smallholders on the ground, and that it's possible to mobilize profitable types, commercial types of instruments, equity, loans, while also earmarking finance for restoration. So thanks for this strong case. Now I'd like to give the floor to Joycelyn. Joycelyn, your model, I know, is extremely interesting and also a wise use of international cooperation resources. Could you please walk us through this model, this innovative model? And also we'd like to understand, how do you see the next steps? Because I understand you don't want to stop there, you have a vision also for the future.
All right, thank you very much, Ludwig, for that great question and this opportunity to present at the 8th GLF session. As introduced, I'm from Tanzania, an East African country. Our journey, where did this start? This started as a simple but persistent challenge. A story of a young Tanzanian man from the southern highlands of Tanzania, Iringa region, where we popularly call it one of our food baskets in our country, Kienzile. Kienzile had inherited a farm, a family land that was previously owned by his grandfather. Over the years, the same land was able to feed his family, enable his grandfather at least marry 3 wives out of the yields that he got out of that farm. But he has seen a decrease in the yields from that land that he has just inherited. An excited young man who thought that this land would also be a productive source of income and perhaps enable him to get 1 wife, not as 3 as his grandfather's. The land has continued to lessen in terms of productivity and yield. This is a persistent challenge. Kienzile knew what to do with the land, but he didn't have the money to invest in the new technologies, new farming methods to enable his 2-acre piece of land increase in productivity and yield. So he visited a local CRDB bank branch in his district. I'm coming from a bank, one of the biggest banks in Tanzania that has over 250 branches across the country. So it was just a next door branch. He perhaps knew the branch manager, went in and said, I have land, I know what to do with my land in order to increase productivity, but I do not have the money. And what was the question? The branch manager asked him 3 questions. Do you have collateral? Do you have financial records? How is your cash flow? All this was new to Kienzile. Collateral? My grandfather has owned this land for over and over so many years. You know where I'm coming from. Perhaps you even know my family. This land will be passed on from me to my sons and so on and so forth. We've been farming maize for over, I don't know, countless years. Does that count as collateral? The financial institutions do not receive that as collateral. So that is the solution that CRDB Bank, through the CRDB Bank Foundation, had to create. How are we going to create innovative financing to these smallholder farmers to create a platform for restoration, but also sustainability. Agriculture serves more than 65% of our population. I'm coming from a big country of more than 60 million Tanzanians. Out of this, 65% are in one way or the other involved in agriculture. How can we really provide a solution to these Tanzanians for them to change agriculture to become bankable and viable? That is what we are doing. On a day-to-day basis, our journey is to ensure we create innovative means for smallholder farmers to access financing. Access to finance will mean for them changing their methods of farming, walking away from what Kienzile has been doing, a traditional way of farming, farming maize on a day-to-day basis, season by season, waiting on the very uncontrollable rains. We are seeing a lot of climate change. But this same piece of 2-acre land has been serving the family for over maybe 50 or 100 years. The soil fertility is depleting. There needs to be new technologies and new ways of serving Kienzile and his future generations to increase productivity and to make his agriculture not just a practice, a habit, a norm of life, but to make it a business, to make it bankable and viable. We started by working that journey at CRDB Bank Foundation, first of all, by creating a platform of offering financial literacy. What is financial literacy to this young, enthusiastic Tanzanian farmer who was expecting a lot out of that inherited piece of land? Financial literacy was the first step that we did. So we do have a program that offers financial literacy to smallholder farmers in Tanzania. What is the next step from the financial literacy? The next step is offering financial inclusion. An affordable, relatable, realistic financial inclusion method that relates to a farmer in Tanzania, smallholder farmer in Tanzania. We offered a bank account that has 0 monthly interest charges. We also offered very convenient ways of him or her accessing that bank account. This way, we are answering to the 3 questions or challenges that Kienzile faced: collateral, financial flow, financial records. So we do now have his records. On our season to season, we'll ensure that he buys his inputs through the bank account that we have created, that he can access through his feature phone. We also offer financial literacy, reminding him on how to keep the records. How much have you utilized in terms of the seeds that you've planted? What are other extension offices that will support the growth and productivity of the small piece of land that you own? How can we formalize you? Perhaps you and your next door neighbor that also is facing a similar challenge. So we bring them together, we form groups, whether it is a farmer group, whether it is a village savings and lending association, but something that will act as an address, something that will be your initial collateral. If you're saving on a day-to-day basis, week to week or monthly basis, that is going to be your collateral. Again, responding to the challenges, the persistent challenges that are faced by smallholder farmers. We started this slowly. This was back in 2023. And so far, we have been able to offer financial literacy to over 100,000 Tanzanians, directly producers in the agri-sector, smallholder farmers here I'm talking about. And out of those 100,000+ who have been able to access financial literacy, we've been able to offer affordable financing to more than 5,000 of them, with no collateral, with no financial records, and with without the cash flow records that Kienzile was once asked by the branch manager. So this is a solution that we are creating. Looking at why we are here, we are piloting a restorative solution. In addition to not only financing, the smallholder farmers are faced with various climatic challenges. FAO came with a solution of ensuring that we are offering the access to finance, but how can we embed that with offering a solution to the climatic changes that Kianzile has also experienced in his small piece of land. That is what we are piloting in Tanzania. A financial instrument that will not only talk to the direct financial issues that smallholder farmers have, who most of them are women and youth, but how can we also embed that to ensure that climate action is in addition to the financial, to the access to finance that we are offering. There's a lot to be done, scalability, digitization of this solution, but how can we also reach more Tanzanians who are involved directly in smallholder farming in Tanzania? I think I'll pause there for now, Ludwig, but that is our journey of creating a solution to smallholder farmers in Tanzania so far, and we hope this will transition and reach more people. Thank you very much.
Thank you. Big applause also. You see, I told you we had restoration finance champions with us. Honestly, what Jocelyn explained is extremely difficult to put together because you have to combine domestic finance solutions, private sector interest, private finance alignment with the system, plus mobilizing international cooperation support. It's very complex. Congrats for this. I hope this inspires you because this kind of model is very much needed. Now I'd like to ask Victoria about the business perspective. Because Victoria, you've been seeing a lot of what these businesses are doing now in restoration. And we'd love if you could tell us more on how businesses are actually key to sustainable and increased investment in restoration and in agri-food systems. We also like to understand what is currently missing for companies to boost the transition and to be much more proactive in restoration, but also in regenerative practices. Victoria, the floor is yours.
Great, thank you. So nice to see you all today. I'm representing the World Business Council for Sustainable Development, and we're a business membership organization. So our members are typically large multinationals, and within the agriculture and food space, we work with around 65 large companies across the whole of the value chain. So that's from Nestle, Bayer, Syngenta, a full range of companies, most of whom you've likely heard of. And where, if we think back to the kind of original 5 pathways that were shared in the presentation at the beginning of this session, we saw the importance of supply chain finance, but also of blended finance as 2 of the pathways. So those are the 2 that I'm going to speak about. We are working with our members to scale investment in restoration, in sustainable land management, and for the companies, this is really an increasing priority as their supply chains are being hit, similarly to what smallholders are facing as well, with increasing physical risks, droughts, floods, soil degradation. These all affect business resilience. So addressing these is a critical priority for companies as well as other stakeholders. Just a couple of days ago, we announced an update of the level of commitments that businesses and other partners have made to investing in regenerative landscapes. This is under an initiative called the Action Agenda on Regenerative Landscapes that was launched 2 years ago at COP28. And in that period, we've seen the level of investment commitment, so investments that the companies will make between now and 2030 quadrupling, really showing how important an agenda this is for companies. And what WBCSD does is we are working with the companies to turn this level of ambition into action, with a particular focus on how we can facilitate, accelerate collaborative approaches at landscape level, so in specific geographies. The example that I wanted to share today is around the Sustainable Landscapes Partnership, which is working to scale investment in restoration in the Cerrado in Brazil. So this is an initiative that brings together the Soft Commodities Forum, which is 5 of the leading agri-traders, with the Consumer Goods Forum, which is a range of food companies, CPGs and retailers. And I think what's important here is that the companies recognize that they need to work together to deliver impact. So through this partnership, they have developed a shared vision, shared objectives, shared ways of measuring progress. And since the initiative was launched in 2023, they've mobilized together 12 billion of funding towards restoration in the Cerrado. So I think, what this really has demonstrated is a proof of concept of how we can go beyond individual company investments to collective investments, bringing together the value chain as a whole to better share costs and risks more fairly, and also to ensure that we're driving impact at the landscape level. But to the question on what's missing, is at the moment, this is very much like the companies putting forward support to prove this concept. But we really need to see sustainable financing mechanisms, which is going to require much more blended finance, much more collaboration from across the ecosystem as a whole to be able to maintain this and scale this. So we really want to move from a kind of grants-based funding to something that's self-sustaining. There's broadly kind of 3 areas for action that the companies identify where we can strengthen the enabling environment to scale up this financing. The first is around building alignment on monitoring, reporting and verification systems. So this will allow the companies to have a shared language with each other, to have a shared language with financial institutions, and a shared language with policymakers in the public sector, allowing that greater level of collaboration that we know is needed to get finance to scale. The second piece is around having enabling policies in place and incentives, and all too often the policy environment is sending misaligned incentives that are not driving investment towards sustainability outcomes, climate, nature, people. And then the third piece really is around driving greater collaboration, so partnerships to scale finance, and that needs investment in the mechanisms to build the partnerships. So here we're talking partnerships between different groups of companies and partnerships between the public and private sector. Overall, we're really excited about the Sustainable Landscapes Partnership. See it as a really exciting model that can drive new ways of financing restoration and sustainable land management, and really a call for more partners to get involved. We'd be delighted to work with any of you as we look to take this to its next phase.
Thank you very much, and congrats also for these complex models and initiatives you've put together, like mobilizing private sector from different sectors, businesses with different perspectives, to align them in joint initiatives. That's also extremely difficult, so well done for this. That's inspiring also for the other models, because these alliances of companies, of private businesses could also be catalytic or nurturing some of the models that you've developed. So with that, I'd really love to give you the floor. If you have any questions, any reflections, we are happy to give you the mic. I know there is also the possibility to put your questions on this Slido link, and I think we're going to get interesting questions also from the audience online. So, floor is yours. Maybe first to you in the room, in case you have any reflections, questions, comments that you'd like to share. Maybe we can have a look to the questions on the Slido. Yeah, very interesting. The first question, actually, I'd like to pick up on this one. I'm going to pick up 2 or 3, and then I'm going to ask the panelists to reflect on them. The first one, the local solutions, how can they be integrated into international investment policies? Like, it's really the question of how can we, from the bottom up, adapt the international frameworks. You know, oftentimes, like we heard this morning from Garo, this new model, the TFFF, what I found super interesting is that they are ready to adapt the spending to the national realities, to the national needs, the local needs. So, you know, on the way around how the bottom-up approach could shape international financing policies. There is a direct question to Victoria. You mentioned that we need more blended finance. Can you please elaborate on a specific example of a blended finance change-making mechanism? There is also a direct question to Rekia, question to the Barca Fund. Are you able to link the model with local financial institutions? So maybe in the sense of how can you find local financial institutions that would play the role of intermediaries, probably. And then we have a last question from Luis. If public policies for smallholders are supposedly a priority, why does access to credit remain so bureaucratic, slow, and practically unreachable for most farmers? Well, thanks for these questions. I think we have ample material now to reflect on. I'd like to give you a floor. Who would like to start? Maybe Joycelyn or Reka online?
Sure, I can go first, and I'll take the example of Tanzania and see how we can scale it to the world. One of the questions talked about how can international policies adapt to this. We are currently we'll start with the region. We are currently working not only in Tanzania, but in Burundi and the DRC as well. And this model, given that we are piloting it in Tanzania, the plan and the expectation is to replicate it in these 2 countries. So that is at least going out of our borders and impacting the region. On the other side, you can see that we are working, the BMZ is here. We are working with the UN through the FAO. Through our main bank, our financial institution, the CRDB Bank, we are accredited by the Green Climate Fund. That is also taking the solutions that we are currently piloting and taking that to at least a scale that we can. The conversations are ongoing. We participate in various negotiations here at the COP through the United Republic of Tanzania as frontal of the government that we are coming from. That is, I believe that is one of the solutions. Another question was talking about bureaucracy. Access to finance for smallholder farmers has been quite bureaucratic. And this, speaking as a pioneer and a person who has walked this journey in creating this solution at a lower level or small scale that I'm working at, policies within these countries, regulations within these countries. Earlier in the session earlier today, one of the panelists spoke about profitability. I think the lady from the Gates Foundation. What commercial banks want to see is how can we change these small businesses into becoming profitable. Once they are profitable, financial institutions can also adapt to vast support. This is because of the high regulations, especially in a developing country like Tanzania, and the bank that I'm coming from. A crumble in the profitability of a huge bank in a country means the effect is also going to be on the economy of that country. That is why the regulations are quite strict on what we consider, on what everybody consider, quote unquote, the high risk areas. So how can we scale on guarantees? How can we ensure we have the right insurances for the agri sector, all the way crop level insurances? These will reduce the high risks, what is termed high risks in agriculture, and really create solutions that will scale, but also lessen on the bureaucracy that we are seeing. I'm seeing we are bad on time, so I'll stop there. Thank you.
Thank you so much. Yeah, I'll ask Victoria and Rekia maybe to provide relatively short answers because we'd really love to hear Christophe at the end, please.
Yes. I will be succinct. I just wanted to touch on both the first and the second question here. So on how can local solutions be integrated into international investment policies? I think one thing that is really critical here is that the solutions are co-designed by all of the partners that have a stake in that. So that means public and private sector, local partners, national partners, international partners, they all need to have a seat at the table to ensure that we overcome these silos and the solutions really speak to everyone. And then on the question around an example of a blended finance change-making mechanism, an exciting announcement coming tomorrow from the COP30 presidency around a new initiative called RAIS. And RAIS is going to be a mechanism, an accelerator for blended finance, really bringing together initiatives like the Sustainable Landscapes Partnership that I just spoke with the international financial institutes and with governments to co-develop financing facilities in new and innovative ways, so that we can overcome some of the challenges that we've been speaking about. So yeah, looking forward to that announcement, which will be officially taking place tomorrow. But I think a really exciting opportunity to think about and develop new solutions for getting finance to the large scale that we need to see it in this sector.
Thank you. Thank you, Victoria. Now I'd like to give the floor to Rekia for responding to the questions. Please, Rekia.
And thank you so much for the question. So two ways, right, for us in terms of what we think about how can this model be validated and include local institutions. The first thing is we are an investment pool, right? We're an investment fund. And so our pool of investors right now at this stage with Fund 1 are not local, unfortunately, because most local existing investors do not even want to take this capital risk, right? We're a VC type style fund, and they see a lot of risk. But that's okay. We're Fund 1, and our mandate is to prove that the model works, prove that we can return investors' money, and then in the future hope to get more local stakeholders in our funds. Right now we have investors, but none of them are local. So unfortunately, there isn't that local touch to what we do. But however, the second ways in which immediately and much more faster we can achieve and really get local financial institution in this buy-in, in this restoration economy, is the risk that we're taking. We are usually first-time institutional investor in these companies. So imagine a company doing $100,000 a year in revenue in Cote d'Ivoire or in Kenya. They've never got any funding before. All of a sudden, we come in and we provide $100,000 worth of equity financing, and we give them time to go ahead and invest that capital the way they see fit to grow their revenue, but also to develop impact. After 18 months, that company has now processes. They've now filed taxes for the first time because we require that as an investor. They have a database of who they work with, all the stakeholders, where they buy from, where does the supply come from, and they have a plan for the next 3 years on how they want to grow. That company can go now to a bank, a local bank, and get a loan. So, right, and be able to get the next round of funding from a loan. So that's the way that we're building this ecosystem so we can tap into local institutions. And the best way to start in these economies is really loans from local banks. Typically, local banks will not invest because they see them as risky. However, we've already taken that first step. We've proven the model works. We've helped this company become more formalized and really ready for growth to be able to absorb local debt, which they're usually happy because they don't want to give more equity. So this is the model we're working on as part of our Fund 1 and being able to increase that to Fund 2 and Fund 3. And again, by Fund 2 and Fund 3, when we are able to prove that these companies are profitable and can return investor money and deliver impact, then we can get more local institutions to also invest directly into the fund.
Thank you very much, dear Rekia. So, as you've heard, there are many recipes for restoration finance. Those 5 pathways that you've seen the declination today with those practical, excellent examples. So of course, when seeing that, I'm thinking, wow, what journey have we made in the last decade? 10 years ago, we were clearly not there. So thanks to you, to these initiatives, to the courage to innovate, thanks also to initiatives like the AFR100 that creates the momentum to actually shape these models that all inspire us. Now I'd love to invite, to close the session and provide concluding remarks, I'd love to invite Christoph Eichen, who is Senior Policy Officer at the BMZ. Please, Christoph.
Yeah, thank you very much, Ludwig. This has been very rich discussions, and congratulations. And thanks to all speakers for sharing their insights and providing us with guidance on our way to our common goal, restoring a livable planet. Maybe we need some framing again, because it has been widely recognized that without restoring resilient and healthy productive landscapes, we will be unable to achieve the goal of the 3 Rio Conventions. And that's in fact why Germany is a long-standing partner of the global restoration movement, supporting the decade of ecosystem restoration and the Bonn Challenge. This is our political background and why we are here. As the founding partner of AFR100, the African Forest Landscape Restoration Initiative, BMZ contributes to restoring 100 million hectares of forest and tree-rich productive landscapes by 2030 in Africa. And that is also why we are proud partners of the FAO Forest and Farm Facility and the AFR100 Supports Program. Maybe let me come back to 2 issues. Firstly, the role of local communities and the private sector cooperation we have just had a focus on. We have learned that restoration is most effective if it's driven by local stakeholders. They are our partners as entrepreneurs and co-investors in a prosperous value chain that transform regenerative land use in sustainable and local livelihoods. Triple F is showing us the way, putting forest and farm producers, organizations and indigenous and local communities at the center. This is politically, again, why we are here. But we have also seen today that a set of innovative strategies to connect local restoration business to inclusive finance, making local restoration investable also for private investors. It's, of course, a matter of volume. Restoring hundreds of millions of degraded landscapes needs massive leverage of financial resources. That is only the private sector can mobilize. But it's also a matter of sustainability, I can say, involving the sustainable transformation of rural economies. This requires long-term investment and reinvestment cycles integrating entire value chains. And finally, we need creativity, innovation and speed. We have just seen a few examples that only can provide the private sector. That is why BMZ is focusing on the cooperation with the private sector stronger than ever through its new strategy, Economic Cooperation for Prosperity and Sustainability Worldwide. To unlock the potential of the private sector in restoration, and public funds must be spent in smart and catalytic ways, enabling local and international investors to supply chain actors to prioritize regenerative land use. To build the enabling environment, there's lots of homework to be done. Foremost, eliminating harmful subsidies, there are lots of them, and incentives, strengthening governance to control unfair competition through unsustainable or even illegal land use, and building the ecosystem of inclusive technical and financial services that allow small local restoration businesses to thrive. Today's presentations have shown that various building blocks of an inclusive financial ecosystem already exist, but its final construction needs continuous and substantial support. Therefore, I would like to extend warm and urgent invitation to other donors and investors to join us. in building a catalytic blended finance structure to support the transition to resilient and productive landscapes, the foundation of sustainable and rural economics and livelihoods. With the FAO Triple F and the AFR100 programs, BMZ is privileged to count on experienced partners in this endeavor, and therefore I would like to sincerely thank you for your efforts and wish us all continued success that hopefully will be supported by encouraging outcomes of this COP in Belém. Thank you very much.